Will, thanks for joining me again following a record revenue quarter for Melodiol with approximately $7.5 million in revenue generated during Q3, up 265% on the PCP and 56% on the previous quarter. To start, what was the main catalyst for the record quarter and how sustainable and scalable is this growth?
And thank you for having me, Alex. It's nice to speak with you again. As you mentioned, $7.5 million of revenue in quarter three is a major record for Melodiol, following up on just shy of $5 million in quarter two and $2.5 million in quarter one. This revenue growth has really been led by two of our key core operating subsidiaries, Minnova Medicinal Inc., which sells recreational cannabis products in Canada and is expanding quickly in key markets, and Health House International, which operates medical cannabis business in Australia that has a strong position within the market. Obviously, this growth has been pretty significant. However, if you look at our recent press release around Minnova, you'll see that Minnova has been able to continue to sustain its growth trajectory into quarter four. So we're confident that the group still has levers to pull to continue growing our revenue base.
Thanks, Will. Now, last time we spoke, you had just finalised the Health House International acquisition, and that stream netted unaudited revenue of approximately $5 million, including almost $3 million in net revenue from its Australian operations. Has the growth observed by Health House this quarter vindicated the company's M&A strategy? And I guess flowing on from that, are you planning to add to the company's existing portfolio?
Yeah, Health House has obviously been a major contributor since the acquisition closed. And if you look at the revenues that it's contributing versus the price that the company paid to purchase it, you'll see that it's been a pretty accretive M&A transaction for us so far. It's also been a really good strategic fit in the sense that it's operating a medical cannabis business in a regulated market like Australia, which is how the Canadian marketplace began, where we started with Minnova Medicinal Inc. In terms of further M&A, we're always aware and looking at possible opportunities in the marketplace. However, we're also very focused on shoring up our portfolio, increasing the efficiencies to the maximum extent possible to reach further profitability levels.
Thanks, Will. Now, aside from the excellent Q3 revenue numbers, you've also made significant progress with regards to the Hallucinex clinical trials, which are testing the efficacy of psilocybin on treatment-resistant post-traumatic stress disorder. What can you tell us about the recent results, and what's the pathway forward look like here?
Yeah, we're very excited to have announced that after 5 patients through our clinical trial, we've seen an 80% remission rate for treatment-resistant PTSD using our proprietary psilocybin product, Hallucinex. This is a rate of remission that is significantly in advance of traditional medicines for this type of illness, and we're excited to continue the progress as we move into quarter four and 2024. We're about 25% complete the trial. We have 3 or 4 more patients who've already been through the process and we're waiting on results for. So we look forward to keeping the market updated as we get additional results from that trial.
And finally, Will, while the revenue growth is pleasing, there's still plenty of upside for the share price. In your view, what catalysts would bring the share price back in line with the revenue growth?
I think the most important catalyst that we can achieve is demonstrating a group cash flow positive result. Obviously, in the challenging economic and capital market scenario that we find ourselves in, demonstrating an ability to generate positive cash flow is extremely important, and that's broken down into multiple categories. First, it's achieving a level of revenue and scale that allows for the cash flow from those business units to support corporate overheads. And now that we've achieved a $7.5 million revenue quarter, we believe we're very close to the level of revenue whereby operating cash flow from that revenue can support corporate overheads. And we're equally focused on being as efficient as possible in terms of reducing those corporate overheads and finding any opportunities for rationalization throughout any business unit in the portfolio so that we can put our best foot forward and deliver that result early in 2024.
Thanks, Will. Great to see plenty of progress across all fronts, and thanks for joining me.
Thank you, Alex.